Good afternoon, ladies and gentlemen. I've got the pleasure to present you Santa Barbara Resources. And here's the disclaimer. We can, I guess, skip that very quickly, coming into the matter of the company. So we are operating, as you can see, in Peru and in Chile. We have two properties in Peru, one Sancos that we have drilled about a year ago, and Surapata as a follow-up property, and then San Francisco over there in Chile. Where we located? You see that here Peru and Chile. Peru and Chile are both one of the most sought-after mining jurisdictions. They have their laws in place as the tax regime is favorable, and they produce minerals on a very large extent. For example, Peru is number 2 in copper, number 2 in silver, number 5 in gold. Chile is number 1 in copper, number 3 in moly, and number 5 in silver. So they have their act together. They do produce minerals in the country, and they combine about 10% of exploration expenditure together worldwide. So here's a bit to the people that are involved in the company. And Doris Meyer and Rod McKean, they look actually after our legal compliance and administration. And then very importantly, Carl Herring, he's a multiple mine finder. He has worked for majors and junior companies over 36 years. He's contributing to our wealth of knowledge. The same as Eric Edwards, he's in the financial sector. He has finished off the Andean Resources takeover as their CFO for $3.6 billion. So we are prepared for what is there to come. And last towards myself, I'm living in South America for 23 years, living and working there as a geologist initially, for 15 years, hands-on in the fields, and then later I moved up in the ranks, running companies, and now, since 5 years, I'm leading Santa Barbara Resources from the beginning. The share structure, another strong point of our company. You see that here. We have only 22.8 million shares outstanding, fully diluted about 27.5 million shares. That is one of the tightest structure on the market. So if we have an exploration success, which we believe we will have in the near future, there's a multiplier of the value indicated there. Further down, you see market cap is micro, $5.3 million at the moment. That translates to a share price of about 24 cents. And we still have money in the bank with about $900,000. So we come now to the properties. In Peru, we are down in the southern portion. Here's Lima. There's our property in the southern highlands of the Andes. We are surrounded by a whole heap of high sulfidation epithermal properties that are outlined here in these purple stars. There are big companies out there, Goldfields, Newmont Exploring, and we are out here in that belt of properties with the Sancos property, and over there with a follow-up property, Surapata. And very well worth noting is neighboring our property, there's a Peruvian mine entrepreneur opening up a mine on the exact same deposit type. He's only about 7 kilometers away, and he borders our properties. What do we have on the property here is a very large possession, 8,200 hectares, of which most is in an option where we can earn 100% from barrick gold under circumstances, amongst them a clawback right for 51% for barrick gold by paying us 3 times the money back. We have done the expenditure on the property already, so that is complied. We need to drill a few more drill holes in order to be able to exchange the property domain towards us. We are in a mining-friendly jurisdiction. Ayacucho in southern Peru is very mining favorable. The community support us, and that has led into a permit for 300 drill platforms. So we actually can drill on the property within the defined areas wherever we want. So that is a last development a couple of months ago, so we are absolutely habilitated to carry on exploration in the hot zones of that property. Here's where we come from, why we were on the property. We have done trench sampling, and I put out a reference here. Currently, there are operations that are mining at a cutoff grade of 0.1 gram per ton gold, and with an average grade of about 0.46 grams per ton gold, and they have a PEG cash cost of somewhere in the area of $600 to $650 per ounce. So putting that into context, we have trenches on surface that go as far as 134 meters of a gram gold, including a very rich zone of 17 meters of almost 5 grams. And you see over there, they're all oxidized, which is mandatory if you want to do heap leaching, which we are leading towards. And then you have trenches of 60 to 30 meters, somewhere in the range of 0.7 to 0.9 gram per ton. So very favorable findings on surface. which then we have pulled through in drilling. We have drilled 24 holes on the property, and there's a cluster of drill holes that all fall together. The stars mean they end in mineralization, so we couldn't penetrate the mineralization despite of the very deep exposure that we have reached with these drill holes. So the discovery holes here are 154 meters from surface, zero overburden. This means outcropping mineralization at 0.45 grams. That is potential ore grade over here. Then we have 94 meters from surface of 0.47 grams. Again, outcropping mineralization of very good grades over there. And then we see the mineralized envelope is very thick, 232 meters from surface of 0.2. Others with shallow overburden, 0.2 and 0.25. But again, massive mineralization, all oxidized. That's the key point over here. If we plot that up, we see on the map where the best areas are. It's a gram meter plot of the gold values. And over here, what we call, this is Sancos Central. We have the 6 successful drill holes over here. Sancos West has some interesting areas over here that we will follow up as well. But certainly that is the hottest zone on the property, which we have investigated further on. Now, many companies shy away from doing leach tests early on their properties because they don't know what the outcome is. We did leach tests on the drill chips that we got out from the drill program, and we took them from lower grade, 0.27, to higher grade over a gram, and we got leach recoveries from 66 to 93% with an average of 86%. So that's excellent and over average recoveries from these type of investigation compared to other properties. Noteworthy is as well that the deepest exposure, 232 meters, and the lowest grade that we assayed, 0.27 grams per ton, leached 90%. So we know that it leaches excellently to lowest expositions within the drill holes. And here we plot that up. Here you see why it leaches. It's a vuggy silica, it's porous rock. The cyanide can attack the gold within the pores there. And here you see that we have 88, 87, 90% recoveries, deepest hole exposures each time, and then somewhere in between, 93%, 66%, that is what we got. So absolutely fabulous results. And you see the ore-bearing horizon here put up in these sections is plus 200 meters deep. So we know that it is plus 200 meters. We do not know how much is the rest of it. Very importantly, now we know that there's a feeder zone into the system, and these feeder zones tend to carry higher grade ore intervals. We have recognized that through the application of geophysics. There's a resistivity survey there. It's basically measuring the rock's response to electric currents. And this was the area that we have known from alteration before, and it should show a response to the silica. It basically determines where's the silica, which carries the gold in this case, and white rock or white colors here represent silica rocks. So we knew it was here, but that's a new discovery here. That was covered by soils and rocks. And we now know there's a second zone about the same size like that. This is 800 by 800, that's 700 by 700 meters. Very important to realize that now we have 2 zones, and we have found in the extension of the lines, you see that we extended the lines bit by bit here. We found a 3rd zone. But certainly we focus up our drill program here because it was successful before, and we do scout drilling over here in the next round of drilling that we plan. Here's now why we are so upbeat about it. In this section, it shows the same geophysical survey in a vertical section, like slicing through the rocks. And you see that the magenta colors are our successful drill holes here, and the cubes over here are the trench results. So it makes all sense now, because here you have the feeder zone, that white color that goes vertically down below, a massive 300 to 400 meter wide feeder zone that we have exposed on surface, and now we have defined it to the subsurface, and the drill holes over here are on the shoulder of that rich ore zone that we're expecting down there. So we have successful drill holes here, the trenches over here, and it lends itself to believe that there's higher grade and deep mineralization within that feeder zone. So while the magenta colors show us what we have done in historic times or over the last year, the orange colors show us the drill program that we are planning to do in the future. So this is drilling right into the heart of the system over here and extending it further north. And then over here in that new area, which is this area over here, we are planning to do scout drilling as well and testing if this holds up to the same model as here with gold mineralization. So it's very promising geology over there that we are planning to test with another drill program. So here's the drill program that we are outlining. basically cluster or grid line drilling around the successful drill holes that we had from the first program, and then scout drilling in the new zone over here. So while this could lead to a resource definition, it would certainly lead towards defining a minimum volume, and maybe for the resource we need a third stint of drilling on the property, but it will bring the property forward with an expectation of what we can find there in the future. So the potential of the property here, you see that the strong red outlines over here, the bold outlines are where we have drilled, where we have trenched and mapped. That is the area of prime interest, about 125 hectares. But then the entire area that is contained to the north of this with the hollow arrows, that's the immediate potential area to find more mineralization, because that is where the target horizon is preserved. And we have the indication that there's potential for further mineralization. Specifically, on a scale about here is the mine being opened up by the Peruvian mine operator, and they seem to have found additional pods of oxide material coming towards our property, with the property boundary at about here on real scale. So we have expectations that we find additional things over here, gold mineralization in that area. So here's what it looks like for reference. This here is a flat spot at about 2 kilometers distance from where we have drilled into the gold mineralization. That's perfectly located flat spot for heap leach pads in the future if it comes to a mining operation. There's a power line nearby, 12 kilometers away, and water is in the principal valley that you see in the background there. So then we come to our secondary property in Peru. That's the Surapata property. It's basically a twin deposit to Sancos. It's just not as far developed. We have done mapping, geochemical sampling. What it would need is geophysical investigation, the resistivity survey that we have done at Sancos, in order to define the drill targets. But that's 100% ours, 1,500 hectares. And I would say with a bit more geologic investigation, we can get the drill targets on there and move that forward as well. So now we change countries. We're coming into Chile. Here is the world-famous Chilean Maricunga gold belt. It's located in northern Chile. What we have here is different projects with resources and operating mines totaling about over 90 million ounces on 160 by 80 kilometers. A world-famous Cerro Sale, 26 million ounces of gold, 7 billion pounds of copper, similar size. That is Barrick and Kinross. Exeter's Caspicia property next door, about the similar size. Then operating mines, the Maricunga mine of Kinross, about 200,000 ounces produced last year. The La Coipa mine over there of Kinross as well, 200,000 ounces gold, including silver equivalent, produced last year. And we are over here with San Francisco on the eastern edge of that belt. You see here what it is. There's the oxidation, which is the alteration, gravel cover on one side and younger volcanic cover on the other side. We have 3,740 hectares with an option to purchase 100% from private landowners. And the alteration is extremely large, 2.5 by 7 kilometers, as you see that here. And within that, we have done the homework. We have done geological sampling, trenching, mapping, magnetic survey, that's geophysics, all of them, an IP survey, and resistivity. So by means of that, we have defined target areas that we have recently drilled, and we finished the drill program. And within these target areas, we have trench results from beforehand, 21 meters at 0.85 grams over here. So we have the indication that these veinlets, characteristic for all the mines and resources in the area, they're present in the trench. So that's the lead for us that has justified the drill program. So here's a summary where you see the property, 5 by 9 kilometer, very large property in that extensive and well sought after mining district. That's the alteration in gray outlined, 7.5 by 2.5 kilometers. And then the gold anomalies in yellow, magnetic anomalies in orange, the resistivity anomaly in magenta, and blue is the IP anomaly. We have focused our drilling into the cluster of these areas over here with the mineralized trenches situated here. Here's what you see, the drilling. There's the drill rig up there, that's 4,800 meters high. The preparation of the drill platforms, you see that, very nice countryside and easy to work. Here's the summary of the drilling. You see all the anomalies. We have drilled 6 drill holes into the mag anomaly, and then all of the other 8 holes into the gold anomalies, partially coinciding with where we had the trenches and the resistivity anomaly and the IP anomaly. So we have tested all these areas for their potential, and assays are outstanding. We have drilled 14 holes for about 3,400 meters to a depth of 310 meters. So what we have achieved last year, that is outlined here. We have successfully drilled the first phase of Sancos and have done geophysics thereafter. We have permitted the second phase of Sancos basically with unlimited drilling on the property. That's Peru. Then in San Francisco in Chile we have done the geophysics and we have done platform construction. And we have executed the first round of drilling. So what is ahead of us? Obviously waiting for results at San Francisco and then financing the second drilling round at Sancos that is pending and subject to finance execute that drilling. In order to do the drilling, the only thing we really need is the money because the drill platforms are there and they have been defined based on the geophysical information that we have. So here's a word towards our share structure or share performance. We are one of the outstanding shares out there on the TSX Venture Exchange. We have an appreciation of 135% year to date, which the year starts here, which was our low. We had been at about 10 cents, now we're at 24 cents. We had a maximum of 34 cents, and since then we are oscillating about between 25 and 30. So we had been successfully coming off our lows, and we pretend to maintain that way. What do we offer to the investors is top management with extensive South American experience, which is led by myself. We have 2 high potential gold properties in world-renowned gold districts in the best jurisdiction in South America and possibly worldwide as well. We have a drill program that has been just completed and another one lined up in order to get ready to be drilled. And we have an exceptional share structure that will give a multiplier of valuation if we have an exploration success. So with this, I close the presentation and basically I invite a couple of questions if you have them, as I think I have 2 minutes spare. Thank you very much.